Hello, hello, good afternoon. Happy Friday to everyone. Welcome to Business Basics Friday, whether you're here live on Facebook or on Clubhouse. Welcome you all. Hope you had a great week and getting ready for the holiday weekend. It is May 2022, and in New York today is going to be a high of 70. So looking forward to getting into spring mode. Let me go ahead and get some technology going real quick. If you're joining here live, go ahead and share in the comments where you're joining from. I'd love to see where you guys are in the world. And we're going to go ahead and get started in 2 seconds here. So I hope everyone is healthy and well. All is well here. Glad to be back with you. All right, so let me make sure this live is working. Give me 1 second. Go ahead and share those comments. Let me know if you're here. Perfect. Okay. All right, I've got everyone here. So welcome again. Just as an introduction, if you haven't joined us before, welcome to Business Basics Friday. My name is Safietou Russell, founder and CEO of SDR Consulting, Inc. And Business Basics Friday is a weekly session catered to providing valuable information to business owners. Oftentimes we have guest speakers that come in to share information, as well as myself, and help you with the various areas of your business that you have to manage. This is just informational, educational purposes. There's no client relationship or legal advice being shared here. If you're definitely interested in that, we can definitely set up an official consultation. And as far as my background, I've been in the industry 20 years. I'm a CPA and enrolled agent and also have a master's in taxation. SDR Consulting, Inc. is a virtual firm. We are based in New York, but we work with clients all over the US. And we mostly work with business owners, helping them with the startup phase and cleanup phase as needed, and all the fun stuff in between. So as you have questions today, definitely put them in the chat and we'll address them at the end. Also here, if you're here on Clubhouse, you can put them in the room chat or send them on the back channel. I'll try to, keep an eye out on both here. So we can definitely make sure we don't miss anything. So happy Mental Health Awareness Month, May 2022. And so in light of that, I'm going to be covering overlooked tax write-offs for mental health professionals today. I'm going to cover about two to three items, depending on the time and the questions that you may have. And I also want to introduce you to my new ebook that is just launching today, and it's 12 overlooked tax write-offs for mental health professionals. So just in time for Mental Health Awareness Month. And so if you're looking to get a copy of that free ebook, you can go ahead and put me in the comments and we'll make sure to get that to you and have you share it with a friend. And if you're not in the mental health space, don't worry, those deductions still can apply to you. So you might find value in it either way. All right. So what I'm going to do today is share my screen and just kind of go over some of the deductions that are discussed in the ebook. If you're here on Clubhouse, you can definitely see the live, on my Facebook page, SDR Consulting, or in the description for today's event is the link that you can get access to the ebook from. All right, so let me go ahead and share my screen and we will get started. All right, so here's the book, 12 Overlooked Tax Write-Offs for Mental Health Professionals. Make sure my screen's sharing. Okay, perfect. Let's make this a little bigger. All right, there we go. Okay, cool. So I'm going to pick out just, like I said, 2 to 3 items today. So the first one I want to cover is car and truck expenses. Now, with the pandemic, I know a lot of businesses were able to transition to virtual, some weren't. The great thing about mental health professionals is telehealth and video sessions became a big hit and became necessary because people couldn't get out. So with that being said, you may not be driving as much, or you may not have in the last 2 years, maybe you're getting back to it now. But let's just go over the different ways that you can account for your business use of your personal vehicle so that you can see which strategy is going to possibly work best for you, especially if you're working virtually now. Okay, so the first option is standard mileage. And standard mileage is where you're going to track your miles for the year, all your miles, so business and personal, but then a flat rate will be assigned to the business miles to determine your tax deduction that you can write off. And for 2022, that rate's 58.5 cents per mile. So that means for every business mile you drive, let's say you're going to see a client, if you're on site, or if you're going to run errands for your business, run into the bank, handling a business transaction, or if you're heading to a meal with a potential client or a vendor that you're working with. So when you're tracking all those miles, that means you can pretty much take 58 cents per mile as a business write-off. So that method is definitely easier to take because all you have to do is track your miles, and then as long as you have that total for the year, you'll know what your deduction is. When you take standard mileage, you don't also take gas, repairs, insurance, et cetera. So you want to be sure that yourself or your preparer is not taking mileage and gas. I've seen that happen often, and you're actually double counting because the purpose of the standard mileage rate is to account for gas and insurance and wear and tear on the car, et cetera. Okay, so then your actual expense is the second option. Now, with actual expenses, this is where you can account for gas, repairs, car insurance, registration costs, lease payments if you are leasing. And so those are the deductions you can take. However, if your car is not 100% business use, which a lot of times it's not, then you still need to track your mileage to determine what's your business use of the vehicle. So pre-pandemic, if you had an office space or you were going on site to clients, in their homes or what have you, depending on, what your specialty is, you may have been driving a lot and you may have been using your car 50% business or 60% business based on the mileage. But now if you were, doing telehealth, working from home, maybe your business use is only 10%. So that would mean that you can only take that percentage of those actual expenses. You can't just write off all your gas receipts for the year. And you also can't just write off the gas that you put in right before you go to a client visit, because that gas is going to last you, for the next couple of days. So the best way to do it is actually tracking every single one of these purchases for the whole year and tracking your miles. And then whatever that percentage is, if you're using your car 20% business, when you look at the mileage, you would take 20% of those totals. So as you can see, that method is a lot more detailed. A lot more record keeping is needed using that method. But in some cases, you may have a higher deduction with that way, or you may have a higher deduction with standard. So the key is, in your first year of using your vehicle for business, if you want to have the option in the future to switch back and forth between standard and actual based on whatever's higher, then you're going to want to use standard in your first year. If you want to maximize your deduction in year one and get the most bang for your buck, then maybe you'll go with actual, but just keep in mind that your deductions in the future may be lower, especially if you don't have a vehicle that requires a lot of maintenance. Because after a while, one of the deductions you can take on the personal vehicle is also depreciation. And so in depreciating your car, you can get higher deductions in the beginning, but then it goes down, over time and eventually stops after 5 years. So, it depends what kind of vehicle you have, how much you're driving. Either way, in both cases, you want to track your miles, and you really should work with a professional, before year end to figure out which method is going to be best for you. There's different ways to track miles. I recommend doing it with a system. There's so much software out there. To try to do it by paper and pen is very outdated. And most times you won't keep up with it and you may lose the paper. So it's best to just download an app on your phone. There's apps connected with QuickBooks Online where you can track mileage. There's MileIQ. There's another one I just heard of recently. There's new ones coming out all the time. So find out whichever one works best for you. You probably always have your phone with you. So just download the app on your phone. What it will do is track your miles as you drive. And then you'll just come in and indicate that this is a business mile or a personal mile. All right, welcome everyone here in Clubhouse again. Sorry, I'm just trying to keep up with people coming in. Excuse me. So, so at the end of the day, track your miles, have a mileage log, do it electronically where possible. And you can always backtrack and figure out. So let's say we're halfway in the year now in May of 2022. So if you haven't tracked this year, you can always go back, maybe look at your calendar, emails to help you recreate your log. And then going forward for the rest of the year, just track it electronically. All right. So That's a common one. I want to talk about contract labor as well, because there may be instances as your private practice grows where you may need to bring on other practitioners, therapists, and I'm not going to talk so much about whether they should be an employee or contractor. That's a whole nother discussion, but I would recommend that you speak with a labor attorney for sure to differentiate that, and also an accountant who can explain some of the things that the IRS and possibly the state may look at to determine whether that person who's working with you in your private practice is truly an employee or a contractor. But let's say they were a contractor. um, you should know as a business owner that if you pay anyone over $600 in a calendar year and they performed a service for your company, so let's say it's a subcontractor, another therapist, or even if it's an IT company or marketing company, it's important that you get a W-9 form from that person or company, so that if you do need to file this 1099 NEC form, you'll have the information needed to file the form. That form is due January 31st for, so January 31st, 2023 for calendar year 2022. That date comes very soon after year end. And if your books are not in order, if you don't properly have a bookkeeping system in place all year, it's very difficult to meet that deadline timely with accurate information, accurate numbers. So for sure, you want to have bookkeeping in place. That's definitely important, but you want to also have that documentation, that W-9 form from them if they're US based, so that you're not chasing them for that form and you're up against the deadline. So um, over $600, most likely need to issue a 1099. Depending on the method of payment you pay them may determine if you're exempt from this rule, because there's a new 1099 form that, well, I shouldn't say, there's a 1099-K form that's been around but has new criteria related to making payments through merchant providers like PayPal and Stripe, et cetera. So there may be some exemptions on this 1099 because of that new rule. But once again, if you're working with a professional who knows these rules, they can guide you in the right direction. And that's what I definitely recommend, because as mental health professionals, you want to be sure you're giving your all that you can to your clients and keeping yourself healthy. And if we can take the accounting and tax headaches off your plate, that's what we're here for. All right. So that's the purpose of actually putting together this book, and also, focusing a lot of our attention on mental health professionals right now. All right, so W-9, if they're US based, if they are international, for whatever reason, I'm not sure if you would have that situation, but if you're working with someone maybe who's doing your website internationally, or a marketing company, there's a different form, part of the W-8 series that you would need for those people. But mainly that W-9, just Google W-9, you'll find the form. Even certain bookkeeping softwares you may be using can request that form from them electronically. You just want to be sure you have that form. That form gets filed with the IRS and some states, and also a copy goes to the contractor or service provider that you're working with. So there are penalties that can add up for not doing that filing or filing late, but it's better to file late than not at all. All right, so the decision of whether to bring on a therapist or not, if you have the finances in order, if they should be an employee or contractor, those are things you should definitely speak with a professional. I recommend accountant, CPA, as well as a lawyer. All right. Let's go over, let me find what I'm looking for here. So I want to talk about rent. And in that, I'm going to touch on the home office, because since we're talking about telehealth and virtual visits, this is important. So if you have an office space that is separate from your home where you see your patients, guess what? That's a valid business write-off. That space that you're paying for monthly or whatever the arrangement is, you'll have receipts for that. You'll pay that from your business account. That's a valid deduction. You may be in a situation where you're paying utilities and maybe phone and internet. That's also part of your office expenses for that location. If you're working from home, however, that is not a typical rent deduction. The way you would account for the business use of your home generally is through the home office deduction. Now, this deduction, and also even the mileage one, depending on your business structure, there may be different ways to account for this. So just bear that in mind. If you're an S Corp or a corporation, for example, the way you do these are a little different than if you're just a Schedule C single member LLC filer. But the rules in general are the same. So Home office, if you have a dedicated space in your home that's used regularly and exclusively for business, that may qualify for a home office deduction. Regularly means that, you're not just randomly or haphazardly having appointments with one or two clients for the year. You do this regularly as a part of your business, even if you work full time, but you do this on the weekend or at night. That's regularly. Exclusively means that it's a space for business, meaning it's not the middle of your living room where you also sit and watch Netflix or any other TV show, but it is a dedicated space. So it doesn't necessarily have to be a separate room with a door. It can be the corner of the living room where your desk is and computer, et cetera, and your chair. And so you can measure that space, the square footage of that space, if that's exclusively and regularly used for business. And then you're going to have the square footage of the rest of your home. So that percentage can vary depending on how big your office space is. Let's say it's 10%, let's say it's 20%, and let's say you rent your home or your apartment. Then that would mean 10 or 20% of your rent costs, your utility costs, your internet can be taken as a business deduction through this home office deduction. So it wouldn't be a rent expense to yourself, because that just creates a circle. You want to properly take it through your home office deduction. So home office deduction can, have a bad rap, but it's because people are not using it properly in most cases. They're claiming, 70% of their home as business, which most times is not accurate. They don't have a regular space. The IRS has come in and audited people and actually wanted to see their space. So I recommend taking pictures of your office space as well, in addition to your measurements, because let's say you move and then you're audited a year later, you really wouldn't have any proof for that office space. So pictures, square footage measurements, have that all documented and be consistent with that, when claiming it on your taxes. So that's the most important thing with the home office deduction. If you have an S corporation, if you have an LLC or corporation and you've made an S election, or if you are a corporation already, then you need something called an accountable plan in place, which is pretty much a reimbursement policy that the corporation has to reimburse yourself as the employee for use of your home. So that's the way that would work. So the rules are typically the same of how you do the deduction, but you need to have that accountable plan in place if you do have a corporation. And so that's what I really wanted to cover today, as far as some of the highlights of the 12 different, overlooked deductions for mental health professionals. So once again, this ebook is available. I'm gonna come out of the share screen, and you can access that by putting in the comments "me" if you want a copy. And also, if you're here on Clubhouse, you can definitely visit the live recording. I will put the link to the ebook in that live session. So Facebook, SDR Consulting, you can search for my business page. You can also access the link on my link tree. And so if you're here on Clubhouse, feel free to go ahead and get the ebook that way. If you're here on Facebook, then I'm going to drop the link in the comments. And also, if you're here, you want the copy, make sure you go ahead and hit add me to the comments. All right, guys, so if there's any questions, now's the time. Go ahead and ask your questions. If you have questions about deductions and write-offs in general, I'm going to stick around for another minute or two to address any questions. And if you're here on Clubhouse, you can use the chat. And if you're here live on Facebook, drop it in the comments. So I hope all is well with everyone. I know that we're still coming out of this pandemic and we're getting there. I hope you're all healthy. And I hope that your business hasn't been affected too much. I know there's talks about recessions and things coming. I just strongly recommend a few things as a business owner, regardless of your industry, is you really get a handle on your income and expenses and all the cash flowing in and out of your business account. If a recession does occur, it's going to be important to minimize some expenses that may not be necessary or may not providing you a good return. And the only way you're going to see those numbers is if you do have that system in place. So we definitely can assist with getting you set up with a bookkeeping platform, whether you manage it or we manage it. We're flexible. We can do trainings on it if it's something that you have the capacity to do. But you're really going to want to know your numbers to know how profitable you are, if you need to cut expenses, if you need to hire someone. Those decisions like that are made when you know your numbers. So if you don't know your numbers, let's get started on that. We're almost at the halfway point of the year. We're almost at the point for second quarter estimates. So if you're profitable, June 15th, 2022 is second quarter estimated payments due date. And so you need to know your numbers for that as well. And so if we can assist in any way, mental health professionals, we're definitely here for you to, take that worry off your plate. You can definitely find us online at SDR Consulting on social media. You can also call and schedule a 15-minute introductory call, 516-255-6603. Again, 516-255-6603. And you can also visit our main website, sdrconsultinginc.com, and access the intake form to find out more about our services. All right, so if there's no questions, I want to thank you all for joining me on this pre-Memorial Day weekend, Friday, and I wish everyone a great weekend, a safe weekend. I want to thank all those in the services for their service. Happy Memorial Day to all, and thank you again for your service. And feel free to share this content for anyone you feel they may be helpful for, and also feel free to share the link to the ebook so that we can share that information and you guys can understand how to lower your taxes with valid business deductions that you may be missing out on. All right, so I'm going to sign off now. Everyone have a great day. Oh, I think we have a question. Okay, thank you for the information, says Anisha. You're welcome. Thank you, Anisha, for that feedback. And I think we're all set. Yes. Okay, I'm still working the Clubhouse chat here. All right, perfect. All right, guys, everyone have a great weekend. It was great joining you, and see us here next Friday, 12 o'clock Eastern, Business Basics Friday session. We posting, guest speaker topics for the rest of the year. If you are a service provider who can provide value to business owners, we are always looking for guest speakers to collaborate with. So you can definitely reach out to me as well regarding that. And I look forward to having you. Everyone, take care.